Offer accepted? Great. But there is one step that can make or break the deal: the appraisal. In the next few minutes, I will show you what an appraisal is, how it affects your loan, and exactly what to do if it comes in low. Welcome to Money House Media, your guide to mortgage clarity. Today is Appraisal 101. Who orders it? Why lenders rely on it? What the appraiser looks for? And the 4 ways buyers and sellers solve appraisal gaps. We will also cover FHA and VA notes, timelines, and costs. Let's jump in. An appraisal is an independent estimate of a home's market value as of a specific date. The appraiser is a licensed professional who reviews recent comparable sales, the subject home's features and condition, and market trends to produce a written report. The lender uses this report to help decide how much they are willing to lend on the property. After your offer is accepted and you apply for financing, your lender orders the appraisal, often through an appraisal management company, or AMC, to keep the process impartial. The appraiser reaches out to schedule a visit, walks the property, measures, takes photos, and then completes the report. Typical timelines can be about 1 to 2 weeks depending on your market and property type. Appraisers can use 3 methods. First, the sales comparison approach. They select recent nearby sales with similar size, age, condition, and features, then make adjustments for differences to arrive at an indicated value. Second, the cost approach. What it might cost to rebuild new minus depreciation plus land value. Third, the income approach, mostly for rentals or 2 to 4 unit properties, where value is based on market rent and cap rates. For most single-family homes, the sales comparison approach carries the most weight. Lenders use the lower of the purchase price or the appraised value to set the value in your loan file. That matters for your loan-to-value, or LTV, which affects your minimum down payment and mortgage insurance. If the appraisal comes in at or above your price, great. If it comes in below, you will need a plan. Let's do a simple example. Purchase price is $500,000. You planned 10% down, so you expected a $450,000 loan. But the appraisal comes back at $480,000. The lender must use $480,000 as value. At 90% LTV, the maximum loan is $432,000. That creates an appraisal gap. To close at the same price, you would need $500,000 minus $432,000 equals $68,000 down, not the $50,000 you planned. The extra $18,000 is the gap you must solve, unless you renegotiate the price. Option 1. Renegotiate. Buyer and seller can lower the price to the appraised value or meet somewhere in the middle. Option 2. Bring the difference in cash. Keep the contract price, but increase your down payment to cover the gap. Option 3. Change loan terms. Sometimes a different down payment mix, program, or lender credit structure can help. Option 4. Request a reconsideration of value, or ROV. If you or your agent can supply better comparable sales or factual corrections, the lender can ask the appraiser to review. Keep it concise, respectful, and evidence-based. Gather 3 to 5 recent, truly comparable sales that bracket the subject in size, bed and bath count, lot, and condition. Include notes on why each comp is superior to those used, photos, and any factual errors to correct, such as living area, bedroom count, or missed upgrades. Submit through your lender's ROV process and wait for the formal response. FHA and VA appraisals add health and safety checks. Common items include missing handrails, peeling paint on older homes, or exposed wiring. If repairs are required, they typically must be completed and re-inspected before closing. Ask your lender which items are typical in your area so you can plan ahead. In some cases, the automated underwriting system may offer an appraisal waiver on eligible properties with strong data. If your lender receives a waiver and you accept it, there may be no traditional appraisal. Not every file qualifies, so consider it a bonus, not a guarantee. Typical appraisal fees vary by market and property type. Expect a scheduling call within a few days of order, a property visit, and delivery to the lender about 1 to 2 weeks later. Your lender will share the report once received. Read it carefully. Make sure property data is accurate and that the selected comps make sense. An appraisal is not a home inspection. It does not test every system or guarantee condition. Think of it as a market value opinion for lending purposes. You should still do a separate home inspection to understand the property's condition. Big takeaways. Lenders lend up to the lower of the purchase price or appraised value. LTV drives down payment and mortgage insurance. If value is low, you have 4 paths forward. And for FHA and VA loans, plan for possible repairs and reinspection. Ask your lender early about timing, costs, and waiver eligibility. Download our free 10-step home buying guide using the link in the description. Subscribe to Money House Media for weekly explainers and tell us in the comments which topic you want next. This video is educational, not financial or legal advice. Programs and guidelines change. Please consult licensed professionals for your situation.